Joining us now in San Francisco is Contessa Brewer, along with Draftkings CEO Jason Robins. Contessa.
Sarah, thank you very much for that. Look, we're looking in the gambling industry to set another new record for Super Bowl handle, or the amount wagered. The industry thinks $1.7 billion. How's it looking? Are you expecting another record this year?
Well, we're expecting really big things. I don't know if it'll be another record or not. We're in our quiet period, as you know, so have to be careful on that. But definitely love what we're seeing, and great to see that the industry is still growing, and I just think a lot of excitement and interest around this event every year.
The questions that investors have are really about predictions market and whether there's cannibalization. I've pointed out on CNBC multiple times that over the last 6 months, and you really tie it to when Kalshi said, look, we're going to offer combo bets that look an awful lot like parlays, that DraftKings stock is down 40% or so. The commissioner of the CFTC just came out last week and said, look, we're going to yank the proposed rule that would have banned sports from prediction markets. And we're going to go back to the table and we're going to create some clear guidelines. DraftKings stock tanked. What do you want people to know about the opportunities and the challenges in prediction markets?
Well, I actually am glad you brought this up, and that very event was very perplexing to us because we were very excited about the chairman's comments and really felt like it was a positive step for what our plans are. We launched a predictions app, as you know. We intend to go out and win in this space, as we have said. So getting more clarity for a legal regulated operator like us, getting clear guidelines is a huge step forward versus, I thought, what was a bit of an opaque situation before. So I really thought that was a great statement, but sometimes it's maybe us not telling the story, maybe the public markets just aren't ready to hear it. Sometimes you have a different view than what the public markets do, and we just have to go out there and prove it, which I think we'll do.
A lot of the critics of prediction markets in the gambling industry have pointed out gambling pays high taxes in the states. Prediction markets don't. And that's money that, if you don't have to pay state taxes, that's money you could reinvest in the business or invest in marketing and promotions and things like that. What do states need to recognize about how they're taxing gambling when it comes to earning tax revenue? Because we're seeing Illinois, the handle in Illinois is declining every month since they've passed on this fee per wager.
I think what people have to understand is still a new industry. And, one of the nice things about having all these different states is you get to see things that work and don't. Obviously, if you raise taxes in the very short term, you're going to get a boost. But I think over not so long a period of time, you're seeing exactly what you're talking about in Illinois. And I think the more data points we get like that, coupled with the very real threat of predictions to states, which, as you said, don't pay taxes, I think that's going to cause a real slowdown, at least I hope so, on the tax rate increase, and maybe make some of the higher tax states rethink, is this the right place to be if we want a long-term sustainable industry?